Well, hello everyone. Welcome to Long Options. I am filling in today for Rachel. And today we are going to talk about long calls with one ATR targets. And the reason that I'm doing that is that I was in Santa Clara this weekend and someone came up who's a fan of trading a smaller account. And he said, in the past, you've done a lot of those like long calls or long puts with one ATR targets, and you haven't done as many of those lately. And so this class is for you. So I hope my friend in Santa Clara is watching because we're going to talk about this strategy. If you're not familiar with it, you're in exactly the right place. And so this is a very short-term trading strategy. It is, I like to think of it as a dating strategy. We're not in this, for the long term. The intention is to be in and out in, a day to a week, maybe. So that's what we're going to talk about today. If you are not following Kevin and I on X, we've got Kevin Horner in the chat today. He's a friend and fellow coach, and he understands this strategy as well as I do, I think. So if you've got questions, don't hesitate to ask. But you want to be following us both on not only LinkedIn, but on X. So on X, my handle at Barb Armstrong CS, Kevin at Kevin Horner CS. So buckle up because we're going to cover a lot today. We're going to do a bunch of example trades. We're going to review an example trade that I placed in the trading a smaller account class yesterday that hit our target today, and kind of go through how we can analyze those trades as well. So, but keep in mind that this is an option strategy which carries a high level of risk. It's not suitable for all investors. We use the Paper Money software application on the Thinkorswim desktop platform. It is a brilliant place to learn and make sure you understand what you're doing before you consider trading it in your live account. Both Kevin and I say on the regular, have a plan, trade your plan. So I'm going to show you where you can access an example trading plan that you can then customize and make your own. Okay. Oh, so Kevin is saying this is the first option strategy he ever used. I learned this strategy from Scott Thompson, who is still a coach and a manager here with Schwab. And he used to have a class on Fridays that was called a one ATR trading class or an ATR trading class. So yeah, that's that. So we're going to, be specific today and place a bunch of example trades. So I don't tend to do big market overviews in my classes anymore because Kevin Horner does such a fabulous job 5 days a week, often has a guest on with him. But if we come and we look at the S&P 500, it's hitting a new all-time high today. So if you're wondering why we're not doing bearish trades, and we could, but we're just looking at, if we're trying to go with the flow of the market, where is the market flowing? It is going up, my friends. So the S&P hitting a new all-time high today, the NASDAQ hitting a new all-time high today, the Russell, oh, you don't even have to have a good arm to throw from where we are today and hit, an all-time high on the Russell. And then how about the Dow? Oh, look at that. New all-time high on the Dow. Yeah. And then our volatility heading a little lower. And, who's leading the pack? 3 guesses and the first 2 don't count. If we come to our public watch list and look at sector indices, and then I've customized this. If you're new to this webcast or new to my classes, I use this all the time. And this is a 3-month, this is a 3-month column and a 4-week column. So we see that technology, which is hitting a new all-time high today, leading the pack, followed by communications, which is down a bit today, but has been leading over the last 3 months, followed by discretionary. Now, if we look at the last 4 weeks, are we seeing a bit of rotation? Healthcare is starting to pick up a bit, and industrials, are showing some strength. Okay, but I say that because a lot of the stocks that we're going to look at today are more in that tech and or discretionary space. Okay. So I want to start with an overview of what this strategy is. And I want to thank all of you who are here live. And I know that we have a lot of what I would affectionately call the usual suspects here with us. So to AP 514 and Frank and Josh and Coco Mar and Jay and Bill and the rest of the gang, Sharon, I'm delighted that you're all here. And I know that you're familiar with this strategy, but if you're not, here at the bottom, I have ATR as an indicator. And if you don't have that, if you come to edit studies, you can just type in ATR. Of course, it's at the very top of the alphabet, so you don't have to scroll too far. And then you would just add that. Now, I already have it on here. Now, the default is 14 days. And if you don't know what ATR means, if you click on that little question mark, it'll give you a very detailed description of what ATR is. But the Coles Notes version is average true range is the average amount a stock or an index has moved from the high of the day to the low of the day over the last 14 days. Okay, and it's slightly more complex than that. And if you want, like at your leisure, you can go and read this more detailed definition. But I've added that. Whoops, I meant to take that off. We just need one copy. And what this tells me, if we come and we look at a stock, and we're going to look at NVIDIA to start, because in trading a smaller account yesterday, we had a stock that was going sideways for quite some time. And NVIDIA has done a lot of moving to the upside, as we all know. But then it broke out and came back, and we kind of had like a long bull flag here. But yesterday we had, what the technicians amongst us might call a diagonal resistance breakout. And so we did a 1 ATR trade, again, prompted by my friend in Santa Clara. And today it hit that target. And so I'm going to bring up, so yesterday we put this into the chat. It was an example trade on NVIDIA. The 1 ATR yesterday on this was 741. And now it's gone up a little bit. Now it's 760, but our target was 229.58, and it hit that this morning. And then we had an exit that was 1 ATR below. So the idea with this strategy is that when you look at a candle, you say, okay, the high of the day, and the high of the day ended up being higher than when we placed this trade. It was 222.17, and we added this 1 ATR to it. And then our exit was if it went 1 ATR below the low of that day. And so when we come and we look at this position on, let's go to NVIDIA. So we did 2 trades yesterday on this, actually. We also did a long call vertical, and we're going to compare and contrast them. But this is kind of what we're expecting, if all goes according to plan, that it will go up and hit our target, and that we're not going to be in this for a long period of time. We went out to July to minimize the impact of time decay, but the reality was that for this one, we were in it for 1 day. And so, how did we do? Well, we got in for 490. And when we hit our target, we got out at 680. So you just simply subtract one from the other. And so we made $1.90 a share. And in our class, we position size based on max loss. We could have lost that entire $490. So we only did one contract. And so what was our return on risk? Because we were risking $490. Our return on risk on this one was, drum roll please, 39%. So that's not too shabby for a trade we were in less than 24 hours. Now, does it always work out that way? No. We could have been down 39%, and I didn't take the commission or the transaction fee. It was 65 cents to get in and 65 cents to close out the trade as well. But that's an example of how this can work when things go according to plan. Now, let's look at some new examples. And I've got several here, and we're going to move kind of quickly on these. I'm going to put this in my larger account. And the first one we're going to look at is Apple. And when we look at Apple, we had this double bottom pattern that set up over a period of several months. I mean, it started in December and then it broke out. And what we're seeing now is, more of a classic bull flag pattern. Now, when I looked at this first thing this morning, this candle was quite a bit smaller. But do we see a stock that is in momentum? And, I would suggest yes, because once it broke out, it really hasn't looked back, has it? And what I'm seeing here when I play I Spy with my little eye, is a bull flag. And today we have the coveted close above the high of the low day. So, and again, we're not putting a ring on it. We're just saying, do we think that this could continue to go up? And if the answer to that is yes, then you could say, okay, well, maybe this one ATR strategy might work. And so Apple 1 ATR example. And the 1 ATR is how much? Well, it's currently 588. And I already did the math. Oh, geez, this morning it was 575. So now I'm going to have to do my math again. So I'm glad AP 514 is here because he always double checks my math. And what is my target going to be based on? My target is going to be based on the high of the day, and my exit's going to be based on the low of the day. So high of the day, 314.97. Well, all my numbers have changed. So 314.97. I tried to be prepared, guys. I really did. And the low, 306.69. So you just have to hover over the candle and it'll give you those numbers. And so I'm going to take my 314.97 and I'm going to add to that 588. And what does that give me? 314.97 plus 588, 320.85. That sounds about right. And then my exit is going to be based on today's low, 306.69, 306.69, and we're going to subtract 588. I'm sorry to hear that, AP 514. I hope that goes well, and you're off the hook for today. I know we have other people armed with calculators in the crowd that will call me out if I get the numbers wrong. So 381 is going to be our exit. Now, how do we put that in? Okay, so we're going to come to the trade tab. We are going to come out to July. Now, if we wanted to do this in our trading a smaller account class, and we could we do the at the money strike? No, we couldn't. Actually, you know what? I'm going to put this in our trading a smaller account class because I can't teach it on Friday because Kevin and I are going to be in, we are going to be in San Diego. So if we look at this and we say, okay, we can risk $500 to $550. And, so we can do an out of the money strike. And you might say, well, that's not as interesting to me because I'm only getting 32 cents of appreciation if the stock goes up by $1. So this is what Delta tells us. It says, if this stock goes up by $1, the value of this option will go up by 32 cents. If I could afford, this $11 option, it would go up by 54 cents. But if I take 54 cents and I divide that by $11, sorry, I can operate a calculator, honest I can, divide it by 11. That's a 4.9% gain, okay? But if I look at, and I haven't done this, if I look at 32 cents divided by 5, I'm going to call it 520, that's a 6% gain. So even though the number is lower as a percentage on what I've invested, it's higher. Now, you remember when, I said earlier, have a plan and trade your plan? Here's some of the components to the example trading plan that we created. We meaning me, myself, and I, with a little help thrown in from, Mr. Scott Thompson, back in the day. But it's like, does this stock trade 1 million shares a day or more? Check. Do we have an entry on the chart? So if we go back to the charts, we have an entry on the chart. So we have a technical entry. Does this trade in open interest and volume at least 20 times the number of contracts we're going to trade? Well, we're only going to do one contract, and there's 17,000 on the books, 7,500 traded today. So check. Do we have a tight bid-ask spread? And we define tight as less than 10%. Check. So it's like check, 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 check. So we got all the checks going. And now we've got our target and our exit. So we are going to come out here. We're going to right click and buy. And we could do buy custom with OCO, but I think it's just easier to change the advanced order to first trigger sequence. Then we're going to right click, create an opposite order. We're going to make it a market order. That's good till canceled. And then we're going to click on our disappearing, reappearing sprocket and bring it up here. And here's the conversation that I have with myself when I'm putting these in. So I always put the target in first. Less room for error when you do things in, a consistent manner. And then I put the exit in second. 381. So is 320 above where I'm trading? Yep. Is 300 below where it's currently trading? Yep. So that makes sense. So just to make sure I didn't make like an obvious math mistake, confirm and send. So I want to buy a call on Apple. How much am I risking? $530. I want to exit if it goes above 320.85 or below 381. I'm going to put this in my long call group. And I'm going to note that this is a 1 ATR trade. It's got a 1 ATR target. So that when I go and I review my positions, when I review my positions daily, if it's like, what was my target on this? Because I manage a swing target differently than a 1 ATR target. So you might say, well, how do you manage your 1 ATR target? So our example trading plan says tomorrow, and if you want to put our target on the chart, it's 320.85. So I just draw my line 320.85, and then I write down 1 ATR target and say, show that on the right. So now I can see what we're going for. So if tomorrow it doesn't come up and hit the target, at the end of the day, this is a $300 stock. So I might say, I'm going to move my stop up to $1 below the low of whatever tomorrow's candle is. Or you might make yours $2. I mean, your plan is your plan, but it's a daily, we're monitoring this daily. Okay, and where might you find that example trading plan? I'm so glad you asked. Because if you come here, and if you haven't subscribed to the Trader Talks channel from Schwab Coaching on YouTube, you're going to want to do that. There's a button in the bottom right-hand corner of your screen. But when you scroll down under playlist to the trade management mini sessions, and I'm going to move these up to be the second section. So the first section is all these minis on candlestick patterns. They're, 2 to 5 minutes long. And then there's a section in darker blue. And the first one here is long calls with 1 ATR targets and example trading plan. Okay, so, you can watch this and, it includes, what to buy, what to trade, when to trade it, how much to trade or position sizing, when to exit, both if the trade goes for you or against you, and then what are your daily routines. Yeah. Yeah, Kevin is saying, I find that by speaking my plan out loud, it's easier to listen to. When I started, as many of you know, I started as a client. And one of the first coaches I had said, when I get to that confirmation tab, I read it out loud to myself. Like, I almost wish I had a dog, because then it wouldn't sound like I'm this crazy lady talking to myself by myself in my house. But yeah, I got over that because it helps. Okay, so next one we're going to look at is Tesla. You may say, like, really, Tesla? Why are we looking at Tesla? It's kind of been on the struggle bus. And yes, it has. But what do we see back here in the middle of April? It kind of was rolling down the hill with Humpty Dumpty, but all the king's horses and all the king's men came in and helped. And we had this diagonal resistance breakout, and it's gone up pretty dramatically. If I change my drawing tool here, it's gone up 32%. I mean, we're still up 25% from that recent bottom. But what we're seeing is this pennant pattern setting up. And you may say, yeah, well, Barb, you teach getting started with technical analysis. It's up next, by the way. But I do, but you don't have to wait for something to break out of a pattern to trade it necessarily. And we did this with Devon not long ago, and it worked out. And we've done it with Apple, and doesn't mean it's going to work every time, because the last time we tried it with Devon, it didn't work out. But what we see here, this candle pattern is called a bullish harami when it happens at a support level. And this candle pattern does not require confirmation. It's considered a complete pattern in and of itself. And so again, we're not putting a ring on it. We're not buying and holding shares, forever. Now, we could do that. I'm not saying that that would be a terrible decision, but this long call 1 ATR strategy is very short-sighted. So we're just saying, hey, we could do a swing trade up to the previous high, or we could do this 1 ATR idea and say, well, here we have Tesla, another 1 ATR example, where the 1 ATR on this one is 1497. So it hasn't changed from when I looked at it like a little earlier before the class started. And what has been the high of today? 423.47 by hovering over the candle. And then what has been the low? 413.65. So our target is going to be 423.47 plus 1497. And that, it comes out to 438.44. And then our exit is going to be 413.65, today's low, minus 1497. And that gives us 398.68. So again, how do we put this trade in? Very similar to the way we put, the same, way we put the last trade in. And if we want to put the target on our chart, I just draw a line kind of in the general area, and then I come in and write 438.44. Now, one of the things that I want to be sure with this is that it's not above that diagonal resistance potential level, because that could throw, it could throw, some trouble into the works. So it's just below that. So we're kind of close to doing a swing trade, if you will, up to a resistance level, or up close to a previous high. Okay, so we're going to come to our trade tab. And the other thing I like to put on the charts is when I place the trade, I just put a little circle around it, so that when I go back to do a post-mortem and I look at it, it's like, was that a legit entry or did I miss something? Especially if you have a trade that has gone wrong. Now, this one, like if we wanted to trade, have our risk at 500 or less, we're going to have to go like way out of the money. And you may say, well, then why not just come to June where you don't have to go as far out of the money? Well, let's have a wee peek at theta, at time decay. So, and let's look at our $5 option. So here's an option that's $5.50 or $5.95. The time decay on that is 43 cents a day. That's almost 10%. That's almost 10%. Like, holy smokes, Batman, that's high. Like, what is it if I come out to this $5 option in July? Oh, I've got to do like 40 strikes. Uh, 20 cents. 20 cents, less than half. Less than half. Okay. So if we're looking at this and we say, okay, and yet our delta on this, our delta is a lot lower. So we're going to make less. And so you might say, well, maybe I'm not as interested, but we're looking at a $15 move. And so someone has typed into the chat, like, how might we figure out our potential gain? So let's go ahead. We're going to put this in as an example. We're way out of the money on this one. Why are we going so far out of the money? Because we don't want to risk more than $550. So we're going to buy one option, single order, first trigger sequence, right click, opposite order, make it a market order. That's good till canceled. Sprocket, target when it's at or above 438.44, 438.44, or at or below 398.68, 398.68. Now you may be saying to yourself, I wonder how much I could make on this. And so we have a really cool tool. I thought it was the coolest thing since sliced bread the first time I saw it. And so again, if we're reading this out loud to ourselves, we're buying a call on Tesla because we're bullish, right? Right. We want to get out when it goes, to 438.44, or if it goes below 398.68, let's exit. How much could we lose? $545. We're putting this in the long call bucket, 1 ATR target, so that we know what rules we're managing it by. Now, if we come here to Theo, Price, and Mark, and this is, like, I'm going to point this out because I actually had to call the trade desk because I couldn't find it when I was a student, and I saw this, and then it's on the trade tab. So you're coming to the trade tab, you're coming down to, your option chain, you're choosing Theo, Price, and Mark, and then this other bar comes up. The first thing you do is hit reset. And so if we say, okay, I'm expecting this to hit the target by Friday. That's my expectation. And if it's Monday, the numbers could be a little different. But it's currently at 421. Our target's at 438. So if this goes up by $17, how much could I make? So I'm going to type in $17. That would be $438.64. It would hit our target. So this option that we paid about $540 for would be worth about $762. So 762 divided by 540, that would be about a 41% gain, which is not too shabby. Now, on the other hand, our exit is at $398. So if it went down by $22 and hit our exit, $399, so $23, that would come close to triggering our stop. We're only 2 pennies away. We'd have lost more than half. So 540 to 230. And so this Theo price tool is a way that you can get just a ballpark figure, because if we hit our number or hit our exit tomorrow, the loss might not be quite as bad because we have 3 days less of time decay, or a couple of days less of time decay. And if it goes up tomorrow, we might have a little bigger gain because, again, 2 days less of time decay. But volatility, and I'm not taking, change in volatility or any of that into account. But that's a way we can get an approximation. Are there any questions on that? Yeah. But Theo price, I think it's a pretty cool tool. How about we look at RGTI? Let's see what that one's doing. This one came to my attention last week. I don't know how it showed up on my radar, but this is another one that, kind of like was tumbling down the hill, and I mean, just got slaughtered, went from 58 to 12. Like, all I can say about that is ouch. And then, as things do, we're down 78% on this thing. And this is another, if you're not familiar with it, Rigetti Computing. It is a tech stock, but it's started coming back around the bend. And then it broke out, it beat on earnings, it broke out, and it's been kind of consolidating here. But it had a 2-day pullback and then this big close above the high of the low day. Kind of pulling back, moving to the upside again today. We placed a trade on this based on the width of this pattern in our trading a smaller account class yesterday. But we did that with stock, and we walked through a reason why we might do that. But could we do a 1 ATR trade? And if we look at the sentiment on this stock, like this weekend in Santa Clara, it was an advanced options workshop. And I just want to point this out because this isn't something that I look at all the time. And man, the numbers have really gone up. But when we look at today's option statistics, call volume 85,000, put volume 14,000. So 85% of the options trading is on the call side. Like, it's extraordinarily, bullish the way it would appear to be traded. Now, you might say, well, hey, these puts could be protective puts. They could be bullish. We don't know why these puts have been put on, or these, like for every call that's bought, there's a call that's sold, right? But this sentiment just seems to be skewed pretty bullishly. But could we just do a 1 ATR trade? And, you're saying, well, the movement is 224. Tesla was 1497. Yeah, but this is a $26 stock. And so if we looked at that and said, well, let's give it a shot, RGTI, a 1 ATR example. And our 1 ATR on this one is $225. I'm rounding up. $225. So our target, and if we look at today's high, 27.24. and today's low 25.43. So 27.24 plus 225, and that's 29.49. And our exit is going to be 25.43 minus 225, 23.18. Okay, so we're going to come to our trade tab. We're going to come out to July. We're going to bring this back to, I call this Barb's Basics. You can customize these. And I don't think we're going to need 40. We're going to go back to 10. And so if we did, so we can do this kind of two ways. We've got, again, does it trade 1 million shares a day or more? 43 million? Yes. So check. Do we have an entry on the charts? Check. Do we have lots of volumes on the options? Check. Do we have, an acceptable bid-ask spread? Check. So here, you've got 25 cents on a $3 option, and the delta is high because, look at the volatility on this stock. It's high. So if we have two things we could do here, we could come out a little bit and with risking our $5, we could do two, or we could just say, we're just going to do this at the money strike and we're going to do one option. So we're looking at concepts here, but as an actual trader, if this were in a live account and you had that constraint, you might say, well, whoops, I don't want 115. If I came out here, I could do two trades, and I might make in total more than if I just did this one trade. Do you see what I'm saying? Yeah. So anyway, if we wanted to come out here and do two, that would be the logic behind it. And then we're going to advanced order, first trigger sequence, right click, opposite order. We're going to make this a market order, good till cancel. We're doing stuff in the same order every single time. And we're saying, okay, if this is greater than 29.49, get us out. $49, or if it goes below 23.18. Now with a stock that's this volatile, the downside, so the upside is that if it works out, you may have a higher profit, but it could come down and stop you out faster too, because the range of movement in any given day can be more dramatic. Okay. 23.18. Save, confirm and send. Okay, so we're buying two calls total. We could lose $506. Current price 26. If it goes above 29.49, check. Below 23.18, check. Long calls. And we're putting this in our 1 ATR, saying that that's a 1 ATR target. And if we look at June 5th, what this is saying is we have a 225 target, right? In an average day, this stock has moved 225. What this says here, by Friday, this is the one standard deviation move is $3 up or down. So if we said, well, if we wanted to go to Theo Price and run our numbers, if it went up and hit our target by Friday, statistically speaking, it's likely to be within that $3 range of movement between now and Friday. So that's another thing you can look at. Okay, so we've got to start wrapping things up, but what have we done? Well, we've reviewed one trade. sorry, that we placed yesterday in trading a smaller account, which happened to be a 1 ATR, so that you could see how to calculate the math on an example trade. We placed 3 new trades. We did one on Apple, we did one on Tesla, and we did one on RGTI. All of them were 1 ATR targets and exits. And then we talked about how to manage those. Now, if we had more time, or you want to do some practicing after the class, on Semiconductor had kind of set up this bull flag. I mean, here's a stock that's up 135%. Notice what sector is it in? The tech sector. And we have this diagonal resistance breakout, or with a bull flag, a close above the high of the low day to day. So might that be a candidate for this type of strategy? Or how about Lam Research? Oh, I guess we can get rid of all these. They've been and gone. Well, let's just clear the drawing set. So when we look at this, we've just had a bunch of bull flag type patterns. Again, bull flag, and what do we have today? Close above the high of the low day. So might that be, something that we could look at? Or how about Global Foundries? Now, this, if you're not familiar with this company, still in the tech sector, it's a semiconductor foundry. So, you may have thought, oh, she's going to industrials. Yeah, no, actually I didn't. And what would you call this? Like, does that not look like a classic bull flag? Yes, it does, my friends. And do we have the coveted Cahole? Not saying that this is the IG, but if you're following your candlestick pattern guidelines and rules, you have a plan and you're trading your plan, that might be considered an entry for an example trade. So there you go. So what am I going to ask from you as we wrap up? If you have never traded this strategy, you may want to go over, like after you've subscribed to the channel, to the Trader Talks from Schwab coaching, go to the trade management mini sessions and have a peek at that example trading plan so that you can have a plan that you can follow, or have an example that from which you can create a plan to follow, and then start trading this in your paper money. I'd like you to hit the like button. It helps move this up in the algorithm so more people can find this content. And then last but not least, follow us on LinkedIn, follow us on X, Kevin Horner CS, Barb Armstrong CS,